Chapter 3 Baseball. Baseball is a bat and ball game played between two teams of 9 players each, who take turns batting and fielding. The batting team attempts to score runs by hitting a ball that is thrown by the opposing team's pitcher. After a successful swing and hit, the batter runs counterclockwise around a series of 4 bases: first, second, third, and home plate. A run is scored when a player advances around the bases and returns to home plate. Players on the batting team take turns hitting against the pitcher of the fielding team. The pitcher tries to prevent runs by getting hitters out in several ways. In investing, Warren Buffett has a great baseball hitting analogy. He says, "I put heavy weight on certainty. Use probability in your favor and avoid risk. It's not risky to buy securities at a fraction of what they are worth. Don't gamble. You're dealing with a lot of silly people in the marketplace. It's like a great big casino, and everyone else is boozing. Watch for unusual circumstances. Great investment opportunities come around when excellent companies are surrounded by unusual circumstances that cause the stock to be misappraised." In Appraising the Odds, Ted Williams explained how he increased his probability of hitting my argument as, to be a good hitter, you've got to get a good ball to hit. It's the first rule in the book. If I have to buy it at stuff that is out of my happy zone, I'm not a 344 hitter. I might only be a 250 hitter. Charlie and I agree, and we'll try to wait for valuable opportunities that are well within our own circle of competence. A player on the baseball batting team who reaches a base safely can attempt to advance to the next base. 3 bases and home plate makes 4 targets. In value investing, remember the 4 filter targets: 1 a business you understand, 2 long-term advantages, 3 able and trustworthy managers, and 4 a sensible price. Of course, a deep bargain price is even better. Why is a bargain price better? Buying something with the intrinsic value price of $1 for 80 cents gives you a 20-cent or 20% margin of safety. This bargain also gives you a greater return if the value of the business continues to retain its earnings and compounds its returns to grow in value. Baseball teams switch between batting and fielding. Fielding is the defensive part of baseball. This takes player skill, speed, and the smarts to position himself or herself to catch and throw the ball. In value investing, defense is acting to prevent the loss of your money. Do this by filtering out all the weak businesses. Filter out the weaker businesses by buying only the ones with strong moats. We want to invest in businesses that have a special enduring advantage. I wonder if the Chicago Cubs' current advantages can continue for a few more years. Theo Epstein rebuilt the Chicago Cubs into a championship club. In October 2011, the Cubs agreed to a 5-year contract with Theo Epstein, naming him the president of baseball operations. Epstein assembled a team with general manager Jed Hoyer. They rebuilt the Cubs baseball from the bottom up with 37 trades, 80 signings and 85 departures. Their impact can be measured by wins above replacement when comparing recent years. The year after Epstein was hired, the Cubs lost 101 games. But the Cubs' win total has gone up each season. Then in 2016, with their first 100-plus win season since 1935, the Cubs won the World Series championship. In the last 5 years, note that the Cubs have completely turned over their major league roster from 2000 to 11. Only 2 current players, Anthony Rizzo and Travis Wood, played for the Cubs in 2012. In other words, management has reorganized the franchise. A baseball game is composed of 9 innings, and the team with more runs at the end of the game wins. Baseball has no game clock, although most games end in the 9th inning. Value investing has no game clock, because you can pass on as many investment prospects as you like. Just be careful to choose wisely when you take your swing. The ability of a player to get on base and to hit for power is represented in the OPS statistic. On base plus slugging OPS is a sabermetric baseball statistic calculated as the sum of a player's on-base percentage and his slugging average. Until 2007, Hank Aaron held the all-time mark for home runs. He had a career 305 batting average and a 155 OPS plus. On opening day, April 4, 1974, Hank Aaron and the Atlanta Braves were in Cincinnati. Aaron batted cleanup and played left field. His first at-bat came in the top of the first inning with 2 men aboard and 1 man out. Reds right-hander Jack Bullingham delivered a pitch where Hank Aaron's first swing of the season flew into home run number 714. Hank Aaron was mobbed by his teammates at home plate, while the Cincinnati crowd stood and applauded. After a lengthy delay in which the ball was retrieved, Aaron was paid proper and enthusiastic tribute. Participating were Commissioner Kuhn and Vice President Gerald Ford. Hank Aaron was given a microphone to address the Cincinnati crowd. He said, "I'd certainly like to thank you very much. I'm just glad it's almost over with." Aaron failed to homer in his next 3 trips to the plate that day, and he didn't play on April 6. On Sunday, April 7, 1974, I saw Hank Aaron hit 4 home runs in batting practice in Cincinnati. This was an amazing display of skill and power that stays in my memory. He went 0-for-3 in that April 7 game. So, Hank Aaron left Cincinnati stuck on 714. Then, in Atlanta's home opener on Monday night, April 8, 1974, Hank Aaron hit his 715th career home run. This broke Babe Ruth's 39-year-old Major League record. At the end of his career, Aaron finished with 755 home runs. Of the 19 players with 534 or more long balls, Hank Aaron is the only one with a strikeout percentage 9.9 below 10.0. In value investing, the career average of Warren Buffett is measured in the returns he has made for the shareholders of Berkshire Hathaway Incorporated. The book value of a share of BRK has a compounded gain 1965 to 2016 of an annual average of 19.0%. From 1964 to 2016, this is an 884,319% gain in book value. And, it is a 1,972,595% gain in market value. The book value of an asset is the value at which the asset is carried on a balance sheet. It is calculated by taking the cost of an asset minus the accumulated depreciation. Book value is also the net asset value of a company, calculated as total assets minus intangible assets, patents, goodwill, and liabilities. How did Warren Buffett do this? Read books about his and Munger's history. I summarize it this way. Buffett has the temperament, attitude, passion, and experiences to optimize his investment decisions. He reads a lot, and he is a continuous learner. In the development of his skills and understanding, keep in mind that Warren Buffett's biggest advantage is passion and attitude for sensible investing. He brings intensity to his game. He learned from Benjamin Graham that the key to successful investing was the purchase of shares in good businesses when market prices were at a large discount from underlying business values. If this were baseball, how do they score their runs and win at their game? Their movement towards buying high-quality first-class businesses was an important boost in the right direction. Charlie Munger was a big influence on their strategy to seek higher-quality businesses. Sundowner-oriented business principles, along with time, training, temperament, and experiences have made Buffett and Munger even better investors. Said Buffett, "Our criteria have nothing to do with maximizing immediately reportable earnings. Our goal, rather, is to maximize eventual net worth. This means maximizing intrinsic value per share."